Markets pointing lower again this morning. Let's take a look at what's happening around the marketplace and what you should be doing with your money. This morning, markets are pointing lower once again, with the S&P now going to break the 50-day moving average at the open this morning. The question, of course, is the selling close to over? Well, maybe not just yet. We certainly have a sell signal going on right now within our money flow indicator. Also, the markets are not entirely oversold yet, so there's certainly some more downside risk to the market. And in fact, if we do break this 50-day moving average, a retest of that lower range of standard deviations, certainly well within context of the pullback, that would also start to intersect with the previous tops and bottoms of this market rally here over the last couple of months. So again, nothing major has occurred here other than we're just going through a correctional process. The important thing is whether or not we can hold these lows back from December, a break of those lows, and we're going to have a much different picture on our hands with a decline back to the lows that we set previously in October. Be a little cautious here at this point, but markets are under pressure, but we're going to be working off that extreme overbought condition that we had coming out of the Santa Claus Rally. But let's take a look at some other important markets as well right now. Small caps continue to remain under pressure. In fact, after not going anywhere for the majority of 2021, coming into 2022, we're about to trigger a sell signal on small caps. Those stocks also still very overbought here, have not had as big of a correction yet as the S&P, but very close to triggering a bigger decline here in small cap stocks as well. Mid caps look just the same as small caps here, also breaking some important moving averages here, looking to retest lower levels, not on a sell signal yet, but headed that way, still overbought. So again, no matter where you kind of look at in the market currently, we're still in that correctional process. The big important part here is whether or not the generals in the S&P give up their gains, which has been supporting a lot of the destruction happening in the lower tiers of the markets. But let's look at cryptocurrencies as well. Cryptocurrency has really become a level of speculation in the markets. In other words, showing what the speculative interest in the market is right now. And again, Bitcoin and Ethereum really both have had big sell-offs here, are down from their previous highs. Bitcoin was trading around 62,000 late last year, currently trading around 41,000 this morning. Again, getting very oversold here on multiple levels. So if we're going to start to see a speculative change in the markets, I would expect to see it start with cryptocurrency starting to recover. And you see the same thing ideally with Ethereum also. Again, same idea here, 3 standard deviations oversold, very oversold in the markets. Again, if we're going to see a change in that speculative appetite, start seeing money flow back into markets, and particularly in the more speculative names of markets, we're going to need to start seeing a recovery in the cryptocurrency space as well, which really kind of sets the tone for the speculative fervor of the markets. The problem here, of course, is with the Fed on deck to hike interest rates, reduce monetary policy, and interest rates on the rise, the concerns about earnings going forward for companies, profit margins, etc., certainly under pressure here, and that could keep some selling pressure on the markets here, at least in the short term. I'm your host, Lance Roberts, for 3 Minutes on Markets and Money. See you back here tomorrow.